What's going on, my financial friends? It's your friend Jack here, and today we are going to be doing the first episode and the first week of my Wealthsimple Trade TFSA challenge. This is going to be a road to $100,000 inside of this portfolio, or maybe even more, maybe even 1 million. I have a video actually of me explaining how you can bring your tax-free savings account to $1 million in 20 years. So if you want to check that out, I'll leave it down in the description. However, this video is going to be on my portfolio, my Wealthsimple tax-free savings account portfolio, and how I'm going to be using Canadian stocks and dividend investing and dividend reinvesting to basically grow it to $100,000. And this series is going to be documenting the entire portfolio growth. Every single stock I buy will be documented in these videos. I'm going to be buying a stock or more shares every single week, and I'm going to be updating the video logs, the series. It's going to be all put into a playlist every single week. So if you want to stay tuned for that, definitely hit the subscribe button and get ready, because this is going to be a fun little journey, and I'm going to be doing it every single week until we hit $100,000 in our portfolio. Right now, the portfolio is currently at $0. However, previously we did have a position in Algonquin Utilities Corporation. However, I have since sold that position because it was my personal account, but I will be moving it back from my tax-free savings account. I'm going to show you guys their stock here in this video too, and show you guys that I am going to be buying them. They are on my watch list, but we're not going to be buying that company today. We have a different company on my watch list that I think I'm going to be buying today. It's at a good price right now, and it's going to be a long-term hold like all the other stocks I'm going to be buying in this portfolio, and it has a good dividend payout ratio. And spoiler alert, it is #1 on the dividend all-star list. Now, if you guys don't know what a tax-free savings account is, if you don't really know what investing is, and you're new to Canadian investing and finance, then this channel is actually going to be posting daily content on Canadian finance and investing. So if you want to know more about that, definitely hit the subscribe button. But basically, my strategy and overall basis for this portfolio is to essentially get dividend stocks, have them grow and receive those dividends, and reinvest those dividends so I can up my tax-free savings account's contribution room over time, and also use the power of compound interest to really get some major returns in the coming years on the growth in my portfolio. And if you don't know, a tax-free savings account is basically a way that you can use to invest long-term. They don't really accept day trading type styles in the stock market, and not be taxed on your capital gains or your dividend payouts, as long as they are in Canadian eligible stocks, which all my stocks that I use in this portfolio will be doing. So with that being said, if you want to know anything more about tax-free savings account, I have a video I'll link down below all about them. But essentially, you can only contribute $6,000 a year, and once you turn 18, you start racking up that contribution room. And if you don't contribute $6,000 when you're 18, it carries over to 19, so then you'd have $12,000, and so on and so on, 18,000, 24,000, and it builds up every year. Right now, I am nowhere close to reaching my maximum contribution room of $24,000. However, I will be investing a lot of money into this portfolio and upping my contribution room over time, because when you reinvest dividends and have growth inside your portfolio, that doesn't count as contributions. These are actually separate kind of gains inside your portfolio, which aren't part of the contribution room because they are growing inside the portfolio. So that is how you can basically up your contribution room over time and receive more contribution room. And if I were to take out all the money, I would have more contribution room because I had gains inside my portfolio. Now, we're going to try to max out the portfolio at some point, but right now we are nowhere close to that. However, stay tuned on this journey because we are certainly going to get there. Now, with all that out of the way, let's actually jump into buying this stock, because I've been really excited all week, basically looking forward to buying this stock. And now that we are here on Monday, I can do so for the video. And yeah, let's go buy the stock. So the company I'm looking at today, or the stock, is going to be Canadian Utilities. And yes, this is technically a competitor with my previous stock, and I will also be putting another competitor in this stock that's dividend paying in my portfolio, because I want to be diversified over the competition technically. But Canadian Utilities has been increasing their dividend for the past 49 years. They are the leading dividend paying stock in the aristocrats or the all-star list, whatever you want to call it. But they are in the dividend aristocrats, and they have been increasing their stock for consecutively 49 years, which is quite impressive. They do have some debt, and there is some downsides to this company. However, their earnings potential and the rate of return is pretty good, and I've been looking into them quite a bit. They are at the top of the dividend aristocrats, so they're probably going to be increasing their streak for a while to come. They do have majority of, a lot of majority of the market in terms of utilities in Canada, and they are a really big company, and they do have a diversified portfolio of where their investments are in electricity, pipelines and liquids, retail energy business, and a bunch of other things. So they are a pretty strong company, and honestly, I think they are a long-term hold in my opinion. Obviously, this is not financial advice, but I am going to say that in every single video, but this is a company I'm going to be buying just one share in for this video. I'm not going to go crazy. I'm going to put one share in. They do pay out their dividends in quarterly installments, and I believe right now it's about $1.75 per share, which is 5.17% of $34. So we're going to go ahead and we're going to buy one share of this company, and we're going to put it in our tax-free savings account. Also, keep in mind when you guys are buying, there are market buys, limit buys, and stop limit buys. When you have a market buy, the market's delayed by 15 minutes. So what I'm going to do is put a limit buy in, and then, as it says right here, basically, I'm going to ask for the price that I'm currently seeing on my screen. And this way I can ensure that it's not going to buy the stock for me unless it's at that price or lower. Otherwise, it just won't buy the stock, which is fine. So we're going to continue. And right now the price is $33.98 that we see. So that's the price we want to lock in. And if it's not going for that price, if it's spiked up, then it's not going to buy it for us. And we're going to buy one share at that price. That's our market order. Confirm. And the order is sent. So now it's going to be bought if, and it just got our portfolio kind of glitched out. We don't have $300 in there, but the portfolio is going to be bought, and it got completed because the share was still at that price. Obviously, this share is not going to fluctuate too much. It's not very volatile because it is a big dividend stock, and it's more like a blue chip kind of company. But yeah, there's a holding, 100% of our portfolio right now. But with that being said, let's go take a look at the other company that I do plan on rebuying that I had on my personal account. If you didn't watch that video or you don't want to watch that video, I'm just going to tell you guys right now. I do have a whole video explaining that stock, but the other stock that we have in our portfolio, or we're going to have, I'm going to buy this week when the price dips a little bit because it's $21, or whenever it does dip back towards 20, which I believe it will. But right now, $21. We did have 6 shares of Algonquin Power and Utilities Corp. They are more diversified in the terms of reusable energy. So I really do like this company over Canadian Utilities, even though they aren't nearly on a 49-year streak. I do think this company is still really good. 5% dividend yield, and I believe this one does actually pay monthly. So this is one that I'm going to be putting a lot of shares into going forward. I'm going to buy my 6 shares back this week, and I will update you guys next week on how my shares of Algonquin Power and Utilities Corp, as well as Canadian Utilities, are doing. But yeah, I just want to share that with you guys. That's pretty much week number 1 of my portfolio. I am honestly wanting to buy more stocks right now, but I'm just going to be doing one stock a week, and it might be 1, 2, or 3 shares, but just one a week. I think I'm going to be going one more stock into the utilities side of things industry, and then I'm going to be going towards more of the banking section. And I really want to diversify my portfolio because I don't want to be all in on one industry. But the Bank of Nova Scotia is a stock I also have on my watch list, and I also have some REITs up here. This one is a trust, so it's a managed REIT, and they're not really for these REITs, or the managed trusts aren't really going for growth. They're just high dividend yield. This one I believe is a little bit more growth, but not really. And also another one I have on my list is actually BMO Covered Calls Canadian ETF. This is a bunch of banks, and they use a method called covered calls. If you don't know what that is, honestly, I don't fully understand it either, but it is a very good dividend yield, 5%, and they are focusing a little bit on growth. They have been growing over the past 5 years, and they did take that hit in March, but they're at a pretty good point right now. And this is a covered calls Canadian bank, so it's not just one bank. It is an ETF, meaning it's also a managed kind of fund, and it is underneath multiple banks. They aren't just having 1 or 2 banks in their portfolio. They have multiple of the big 5 banks in their portfolio. And I do want to look into this ETF and explain more about it. However, I think I'm going to save that for one of the coming weeks because I do have it on my watch list. I do plan on taking a deeper analysis into it, but I'm not buying it just yet. I just wanted to show you guys what I'm looking at right now. And if you guys have any suggestions or for things for me to look at in terms of, you know, different industries other than the utilities industry, then definitely leave them down below. I'm open to some suggestions to take a look at. But yeah, that's my dividend portfolio growth for week number 1. If you guys missed the episode on me buying the Algonquin Power Utilities Corporation stock last week, you can go check that out, link down in the description, as well as any of the other links I talked about in this video. But lastly, if you guys don't have a, you know, account yet on Wealthsimple, you can go ahead and use that code down below, and you'll get a $10 cash bonus added to your account when you deposit $100. But yeah, that's the video for today. I hope you guys enjoyed this video. Thank you guys so much for watching. It's been your friend Jack. As always, keep learning, keep earning. Peace out.